Alright traders, within this video, I'm going to be giving you a method on how to identify when to buy the breakout. This is going to be a clear, exact entry point on how you can successfully buy the breakout. So if that's something you want to learn on how to identify and read these charts to successfully buy the breakout, then I encourage you to stay till the end of this video. So guys, first things first, we're going to go over AMZ as our example. So remember, this strategy, you can go out and use what I'm showing you with into the stock market as long as you find a stock that reaches our criteria. So let's get right into it, guys. AMC stock. So we're going to go over a day trading example and also a swing trading example. So first things first, we're looking at the daily chart. One of the reasons why we're looking at the daily chart is we want to identify where the clear resistance levels are and where the gaps are waiting to be filled, guys. I'm going to show you this clear gap method you can use to consistently make money within the stock market. So AMC, first thing I'm seeing right here is we have a lot of resistance at $14.50, right? So your key resistance level is going to be the 1450s, and your key support level in terms of, day trading this is going to be towards $12 to $13, right? So that's your overall range. So if the stock fails to break out towards 1450s, it's going to be heading towards, $12.50 to $13. Now, if the stock breaks out successfully and turns 1450 into support, it is going to be running to right around here, which is going to be the low 16s. Now, in terms of swing trade potential, your swing trade potential, if you were to, let's say, buy and hold and it was a false breakout and you did not cut your losses, you're going to be looking at around $9. Now, in terms of your breakout potential, if you were to swing this, you're going to be looking at right around here, which is going to be 2040, right? So those are going to be your clear, areas in terms of day trading and swing trading, right? So let's kind of go right into this here. So I'm going to show you on when to exactly buy AMC stock in terms of this breakout. So first things first, you want to see if there's any gaps waiting to be filled above towards these resistance levels. So we know 1450 is a key breakout level because once it goes above 1450 and turns it into support, there's really no resistance up until these key levels on the daily chart, which are around $16 to $16.50 to $17, right? So it can have a huge run if it pushes above this 1450 level. Now, one thing I want you to pay attention to is these gaps. One thing I want you to understand about gaps are when they fill, if they turn that into a clear support level, they're most likely going to continue to run, right? So this is what I wanted to kind of show you. This was very interesting to me. As you can see, AMC has been fighting this battle from, $9 a share to $14.50, $9 a share, and then back to 1450s. And then right here, this is where it gets interesting. The stock fails to break out. It gets to a high of 1467, has a small little push, then it fails to break out. Next day, it gaps down, which means it opens up lower than it previously closed. As you can see, hence the empty space within the chart. So right here, it opens up at $12.95. The previous closing price was at $14.03. So what does that mean? That means that there's a gap waiting to fill at $14.03. So what I'm going to do is I'm going to draw a price line at $14.03. So here's what we know. We know AMC stock, it's trending back up towards that key 14 level. It is hanging in there. All the bulls are trying to push this up. There's a lot of hype around it. There's a lot of bulls buying into it. The volume is there, right? And a massive short squeeze is being created. I mean, if you just study the volume went from 50 million recently all the way to nearly 300 million right here. And the volume just keeps on increasing and the stock is trending up. However, it did fail to break out, but you cannot count out that it did end up, forming towards this higher support. So the point I'm trying to make here is when you see that gap down, you want to set a price alert for that gap once it fills. So what I would do here is once I see that gap down, I would set a price alert, a little bit before. You can do it like $13.80, right? So you set that price alert. Then once that triggers, if that gap waiting to fill turns into a support level, the stock is going to run towards 1450s, and then if it breaks out and turns out into support, it's going to push towards $16, $17 a share. So now I'm going to be showing you how to identify the clear entry point. So now that we drew that, and let's say, okay, the stock gap down and your price alert just triggered, your price alert would have triggered, right here on this day where it had this massive push. And another thing to keep in mind when you're doing this is the volume. The volume right here when it was bottoming out was at 50 million. Next day, you have a strong push from 12s to, almost $14 a share, 113 million in volume. So the volume doubled. And then the day after that, 213 million. So the volume consistently doubles, right? So as long as the volume is maintaining, it's going to be another good reason to buy into this breakout. Now, let's go over the intraday chart. Intraday chart has a big play into this as well in terms of when to buy. So let's go to that line that I drew right here, and it was at $14.02, which is right here. So this is when that gap filled. That gap, and for those of you who want to see it, I'll even go to the time frame. We'll go to 15 days, turn off pre-market hours here just to show you visually. We go to let's see. We go to equities, and then we go to show extended hours, disable that. So this is the gap that we're talking about, right? We're talking about right here, $14.03. So it gaps down and then it quickly recovers. The volume goes from 50 million to 100 million. The day after that, which is the day you should have been buying this, 100 million plus. So let's go into that initial reaction here. So let's get right into this. So I'm going to enable that just to make things clear again. Okay, so here we go. So this is the day you would be buying the breakout. And remember, you can use this on the next stock you trade as long as it correlates with what I'm showing you here. So basically, you're looking for stocks that are having these massive gap downs. And when they push back up to fill that gap, if it turns into a support level, you could then buy the breakout. Okay. So remember, volume is key in terms of doing this. So the volume's there, and let's just see how it initially reacts. So once it closes that gap, it breaks out. It gets to a high of 1420. And then it pulls back, and then right here's your confirmation that it is turning that gap level into support. Now remember, if that gap level turns into support, that means the stock is extremely bullish, and it's a key trend level to identify, where it's going to most likely run all the way throughout the day as long as the volume's there. It's going to have a strong breakout. So right here is your confirmation that it is now support, and that is when you want to start buying. Right here, when you see that gap fill, so it starts breaking out, wait for the pullback. Once the pullback turns into support, as you can see, it's forming higher support. Your previous support is all the way down here at 1360s. Your new support is the gap level towards 14s. That is when you want to buy into this. You'd want to be buying right into these three candles. Obviously, the best price to buy would be towards that gap level in this example. That's what you want to be focusing on. And then you can see right here, it did end up coming back down. But as long as the stock remains above that gap level, what it's going to keep doing is it's going to keep pushing for new highs. And we know AMC has struggled several times to break out past 1450s. But as long as that gap level at 14 is continuing to hold up, then that means you should keep on holding the stock. Because if you think about it, you be in towards $14, your risk is like 40 cents. And your price target is going to be towards $16 a share because you're playing the breakout. Now, let's get into this. So you'd still want to be holding, and you could even add as it starts spiking towards that level again. And now let's go over the key breakout in terms of this running. So let's go over this here real quick, zoom out, go right back in. Okay. So right here, it goes back to support. Fails to break out of 1450s, goes back to support, bottoms out, starts spiking, and then right here it really confirms that support is turning, that resistance is turning into support. You got your 1460s now turning into support. It's pushing towards 15s. Daily chart tells us this is going to be pushing towards 1650s, and then the volume tells us this is really going to rip. And as you can see, it did end up pulling back below 1450, but it's still above the gap level, and it's still forming higher support at 1420, and then eventually the stock just takes off and rips, and that's how it's supposed to work. Now, the key to this, remember, is the volume and the strength of higher support above the gap level. And then once it turns 1450 into resistance and the volume pushes, as you can see, nice volume pushing here, much higher than it was here. That's when it's really going to take off. So you want to pay attention to the volume. To give you another example of this, PIRS did the same exact thing AMC did on the same day. So if we go to PIRS, you can see right here, it had a nice gap down. So this day it opened up much lower than it previously closed, opened at 260, went all the way down to 215. Go back to the previous day, take the closing price, 278. There's a gap to fill at 278. So if you go on PIRS, you tell yourself, okay, there's a gap to fill at 278. If this turns into support, then I'm going to want to buy this. Now, if it turns to resistance, remember, false breakout, you're going to want to avoid it. So you see how it reacts initially, and you just pay attention to that reaction. So if we go back to PIRS, you can see it did the exact same thing. And remember, the key to these massive runs, pay attention to the volume. I mean, just look at the daily chart of this, guys. If you study this, there's only one massive blue bar here, and it's 364 million, right? So with that volume cycling through these low float stocks, shorts are going to get squeezed when you see these key levels turn into support levels. You got to pay attention to the key levels, the gap levels, the resistance levels, the support levels, stuff like that. Use the daily chart, use the intraday chart. But you could just see, this stock to have that amount of volume is absurd. It never happens. So obviously it's going to run once it turns that key gap level into support, which is exactly what happened. So if we go back to this here real quick, you could see Let's just pay attention to how it reacts. So right here, it's not turning, right here, it's having a battle. It's at $2.78. It closes the gap, has a pullback, tries to break out, has a pullback, but it's still holding up. Forms a doji at this, key level, resistance level, which is now turning support, which is bullish, and then it pushes all the way to 295. So, same thing it did as AMC. AMC turned it into support initially, had a small breakout, then it came back down a little bit, but overall it pushed through, so you got to pay attention to the volume. But as you could just see, it did at times turn that 277 into resistance, but the support was there. This held up 260s, forming dojis at key support level. The support was there at 260s, and you also got to pay attention to how bullish that is, because if you look at the pre-market, you have a lot of resistance at 258, and it's having nice pullbacks off that 258 level. So once you see that pre-market high and that gap level is turning into support, that is your confirmation to then buy into the breakout. And then as you can see, if you're patient with these, it does pay off. So in this case scenario, you would have been in towards 270s, and your mental stop loss, your stop loss is right towards here. Let's go over this. So in terms of your stop loss, you could just see right here, if 260 cracks, it's going to 240. So you set your stop loss towards, 250s, 260s, and your price target to have that massive run. Then as you can see into the close, it pushed all the way up to $3.80 a share. And then into after hours, it pushed to $6 a share. So yeah, guys, that is one tactic you can use to, really take advantage of these breakouts. Pay attention to those gap levels. This would be kind of like a false breakout example, MBRV. So remember, this works both ways. So MBRV, massive volume. However, just pay attention to how it reacted once it filled this gap. There's a gap right here at $2.39. As you can see, if you check the daily chart, it didn't quite fill the gap here, got to 233, but then it started getting crushed, so already a negative reaction. However, that's not as relevant because the volume was much lower. It was only at 13 million, and then on this day it's at 140 million. So if we just study the intraday chart though, if you look at pre-market, so there's a gap to fill at $2.39 as we identified within the daily chart. So $2.39. If you see how it's reacting, initially it had a small little breakout, but this isn't that big of a deal in pre-market when the volume's this low. As you can see, very negative reaction. It's failing to hold up, had a quick little spike, turned into resistance, and then right here it forms these lower highs, turns it into resistance, which is extremely bearish right here. So when you have those bearish confirmations, it's going to have that gap close reversal, which basically means the stock fills the gap, turns it into resistance, right here, turns it into resistance right here, double top, bearish candle open, all bearish confirmations to short, and then hold towards the end of this day. So as you can see, it's a pretty one-sided overall trend. When you have that false breakout, it gets absolutely crushed. And then when you have that strong breakout, it usually continues to run as long as the volume's there, like AMC and PIRS. Just be very careful though, in terms of buying these. You have to make sure the strength is there, a catalyst is there, and the volume is there. Otherwise, you're going to be in a situation like NBRV, where if it's just looking extremely bearish and the volume's fading off, it's going to get absolutely crushed. So yeah, guys, I hope that helps. Let me know what you think, and smash the like button. I'll see you in the next one.